All settled down? Am I audible? Super. Well, it's an interesting panel. I'm sure that I promise you it's going to be really, really impressive, interesting, interactive. Well, I'll give you a little bit of pitch who I am. I'm founder of Virtual.com, India's one of the oldest game development companies, started back in 1998. And I'm founder of Co-Innovate Ventures, which is a accelerator and a fund. We registered that in Australia, eventually in India, and Entrepreneur Phase, and also the founder and chairman of World Summit, where you all are actually sitting in the room, partnered with WASD. I was a complete bootstrap guy. When I started, I had 49 rupees in my pocket, which is less than a dollar. Yeah. And I'm coming from a family background when my mom, she is a lawyer, public prosecutor. My father, he used to be a corporate guy. He retired. And then I said that I'm not going to pursue anything on job. And I was 17 years old when I said that. I just passed out of my school days and said that I'm going to be an entrepreneur. Even that entrepreneur word was probably not there in India. While doing bootstrapping, I met several different people who became eventually as friends. They invested on trust. And when we started our own fund, the trust factor is going on till date. And happily, it's a 97 plus countries network. With that note, I have got gentleman and one woman in the panel, whom all I call as friends and family. And I've got interesting panel today. The reason is, I've got a technologist as a woman, who is going to probably share her details about impact on technology and how to scale up the company. And then we are going forward with something which people feel that investors are sharks or tigers or probably lion or lioness who is going to eat you as a startup. I don't believe that. Yeah. So let me not take a lot of time. I'll be asking all my panelists individually to introduce themselves. Starting with Professor Naresh, and eventually go to the beautiful lady, and then go to my brother Farooq, and my friend Dunstan, and my new friend Amit. Yes, sir.
My name is Naresh. I'm the corporate finance. Hi, my name is Naresh. I'm in the corporate finance world for the last 2.5 decades. Primarily, my career spans working with the big fours in 3 continents across 600 projects. And I sit on the steering committee board of Dubai's Incubation Authority, which is INFI, along with my colleague here, Amit. And also I'm in the VC space, so we look for interesting opportunities from Americas to Middle East Africa, Singapore, India, everywhere. And I'm also at the founding board membership for some very promising startups. One of those founders is also with me here. So that's me. Thank you.
Super.
I'm Professor Lisa Wilson. As you can probably tell from the accent, I actually am Australian, but my professorship is actually out of South Africa, and my professorship is in the area of innovation, entrepreneurship, and emerging technologies. I'm one of the world's leading experts in blockchain, but also in SMEs and ESG. I currently am the Managing Director of XTCC Investments, which is the world's first structured exchange tradable investment product for carbon credits. So I've just come from Blue Zone in COP28. But most importantly, we have also just won the world's best tech platform for blockchain for climate, the climate market. Very proud of that because clearly I am a woman. And I'm very keen to be on this panel because regardless of what anybody says, we still only get 3% of capital, and I think the fact that I'm the only woman sitting on this panel actually says it all.
Thank you, guys. My name is Farooq Khan. I'm a founder of a company called Premium African Holdings, very Africa focused. I'm also a managing partner at Acon Latin Africa. I'm a do you remember the Bill Clinton and Hall Prize Foundation Hall Prize, where every year we meet and give a student startup $1 million for their idea? I'm also a venture partner at Rest Capital, a venture capital based out of USA, and it's an honor here to share my 2 cents on any topic that I raise with them. Thank you.
Good evening, everyone. My name is Dunstan, and I head the family office of Sheikh Ahmed bin Faisal Al Qasmi, and we are into more than 15 diversified sectors like hospitality, healthcare, aviation, entertainment, sports, to name a few. And I personally I come with a career span of about 38 years, working with many big groups in India. And currently we are embarking on a great journey of completely changing Ras Al Khaimah, which is one of the emirates of UAE, into the next destination. And under our family office, we are coming out with some mega projects like the world biggest film city. We're coming out with a sports academy. We're coming out with a wildlife sanctuary. We're coming out with a pharmaceutical city project, an underwater theme park, and many more. So at this juncture, I'm keenly looking at associating with some of the great ideas or the startups where we can integrate into these projects and support them in the journey. Thank you so much.
Hi guys, I'm going to give my introduction in 3 parts because this is all about entrepreneurship and investment is one part of it. So I hail from Delhi. I was born and raised in Delhi, a product of a single mother that raised me. I come from a very low middle class background, believe it or not born to wealth. Spent the first 14 years of my life working for Fortune 500 companies across the world. Companies like ITC, companies like the Tata Group, Pernod Ricard, and then finally Boston Consulting Group. And then became an entrepreneur. I'm a serial entrepreneur that runs multiple businesses. Today I'm a venture capitalist running multiple funds. The area of my interest in terms of investment lies between deep tech in the climate area and deep tech in food security. Those are 2 aspects that I'm quite broadly driven by, and all my 3 funds are driving it. On the side, I support one of the largest women incubators in the UAE that we built from having 5 women on board to 700 women today. And I also sit as the acting chairman of the Australia and New Zealand Chambers of Commerce, which is bootstrapped by the Australia and New Zealand Bank, one of the largest banks in the world. So thank you, that's me.
Thank you so much. Now to take the tone forward, I would love to ask the first question to you, Professor. When we talk about bootstrapping startups, people are, at least 60% of Indian startups, they feel that if they have got an idea from the college days, maybe from the university campus, they can get funding. And because they will get funding, they will run their own business. Would love to understand your perspective. Is it the same kind of mindset you are watching almost everywhere? Or is there any kind of change of mindset that you see?
So I think the climate for funding is ever tighter, if not the tightest, I would say. And the competitiveness at a global scale is only getting enhanced. If you're talking about small checks, angel investments, early believers, it's still possible for the deserving and the worthy. But I think as the technology gets evolving and as you get more and more competitive people entering the world of entrepreneurship, which wasn't the case earlier, I don't think funding alone can help a startup thrive, sustain, and then survive, I would say. So initial funding is still possible for the deserving and the worthy, but the number of elements or number of criteria that need to be checked boxed for an ideation to reach a stage where it can become a sustainable startup and thereafter a scalable sort of a venture have grown multifarious. And all those, almost all those boxes need to be checked contemporaneously or simultaneously. That's the biggest challenge. So because we've got a lot of colleagues here, I'll keep it short and concise.
Thank you so much. Well, we have got an input, like it's almost same in almost everywhere. And And when we talk about raising capital, we have, of course, a very basic thing that we need: mentorship and guidance. As from my understanding goes, like as an individual Indian investor, when I also invest, I don't only invest money, rather I go with the market. Would love to understand that perspective from Farooq when we look at Africa as a destination, and we are doing a lot of stuff with the Middle East. For the African startups, when they pitch, when they want to raise capital, what is the main gap that you see in them? A. B. What is the importance of mentoring for the African startups?
Well, for African startups, I think is a fairly new ecosystem, and they are grappling with the idea of trying to understand the space, trying to understand the space, and catch up with how the world is moving towards the venture capital space. What I've observed about African startup is that we have a very dynamic territory. There's lack of jobs. So once a young African gets onto the media space and picks up a narrative that this startup has raised $2 million, $3 million, you find the excitement to quickly also start, and it's creating a lot of unguided excitement and direction. Like Mustafa said, you might be moving fast in the wrong direction. So yes, we want to get them to be able to manage their excitement, let them understand that it takes quite a lot to be a startup, to prepare yourself, to understand that there are certain metrics that you need to take, some boxes that need to take before you even go out there to go and pitch. The excitement to go and pitch is there, it's very profound. Every now and then I have a massive avalanche of young people trying to find a way for me to create pitching opportunities for them. But we say, look, take your time, hone the idea, build some level of traction, get investors, point some, traction towards investors, lens, so that that confidence is built. This is where mentorship comes in very strongly. When you really look at what we do at the Holt Prize, we're able to get the young people. People will come with overly exciting ideas. After you interrogate the ideas, they realize that they are just playing around. So we want them to subject themselves to mentorship. The mentorship should not be in scenarios where it could even be structured. It could be from the basic level where the idea is being honed before it goes to market, in terms of going anywhere to go and push the idea. So it's time bound, it's discipline bound, it's also about doing a lot of deep searching and researching into particular areas that you're going into before you go out to go. Otherwise, it becomes an exercise in futility. It's just a waste of everybody's time. So we are encouraging young people to commit themselves to mentorship in startup. That's why I align with your efforts in that direction. Get them to understand, subject themselves to people guiding them, and even scrutinizing their presentations before they go anywhere else. So we're speaking to managers of economies to initiate various startup hubs. There's a confusion. Immediately people start an enterprise where there's a startup hub, they start pitching. We said, look, this is not a time to start pitching. Incubate these startups, put them through programs, get them to understand what it means to prepare a pitch deck, understand what is an elevator pitch, so that they are fully equipped before anything else. Thank you.
Super. I'll go to Amit, hop into a complete different kind of question. We have seen that there is a concept in the market. If you have a great pitch deck, you will get money. If you have an amazing projection of next 3 years, you will secure money. What's your take?
One word: garbage. Because the reality is, at least I can only talk about my process, not about other VCs. It starts with what is the problem that you're trying to solve and how big is the problem. Based on the bandwidth of how big the problem is, the remuneration is going to be, accordingly. So the reality is that just because you want to become a startup founder, create a problem and think that you're going to get funded, that's not the case. I personally feel. Pitch deck is a representation of your business model in a snapshot that helps an investor on a high level understand what you're trying to do. But probably my colleague Naresh will resonate with me because we both sit in a lot of pitches every week. I think it's the concept of the entrepreneur, how the clarity of the thought, the problem statement, as well as his or her subject matter expertise, either individually or the core team, that's going to be at work to solve that problem. And unless all these ducks are in a row, good luck getting funded.
Super cool. I think we'll be echoing very soon. But before I do that, I'll hop into concern with a question. You usually get a lot of projects, a lot of companies who apply to you asking for help. You guys have a lot of projects which you are doing and you are probably acting as an ecosystem if I'm not wrong. And then you are asking company, let's come, join hands together, grow together. And eventually in the process, probably you can fund it. What is your perspective when you get a company applying to your family office, asking for money or asking for growth? What are the key factors that you watch? Do you echo Amit or do you have some different other perspectives?
No, whatever Amit said is also important. How big is the problem that is going to address is something important. But as I represent one of the family offices, our first priority is to look at projects that is going to add value to this country. That is our first priority. So we look at those kind of projects. UAE being a global market, you are getting projects for different parts of the world. But as I've seen, the current generation who have brilliant ideas, but the only problem that they are facing is they are not able to present it properly. They are not able to, for example, suppose we are sitting at a meeting, the kind of the way they pitch is not adequate enough for the investors to get convinced that yes, this is something which I should vouch for. That is where they lack. That's what I personally see. I've done too many such occasions. That is where I feel that there is a need for a mentorship. See, this younger generation who has the ideas, if they can be mentored in a way that how they pitch them with the investors. Right? See, for example, an investor is he expects the person to tell him in brief in about 3 to 4 minutes what the project is all about, what the return of investment and what the investment is looking at. You can see many cases where after he explains everything, the investor asks him, what are you looking for? So it gives a wrong impression. That is where I think we need to play a major role, especially people like us who have gone through long span in the career.
Would love to have a complete different perspective from doctor. If I may ask you, when you see a business, usually nowadays the trend is if I have AI in my business, I'm cool and I can raise money. If I have a term called deep tech, wow, I'm doing something amazing. But when you dig into them, you will probably understand it's just an idea. They don't have a tech team in the background. And probably the founders or co-founders are not coming from a combination of marketing, finance, and tech. Three other things. What is your take on this? How do you feel that women coming from probably a very strong background, women are usually strong, I call them as unicorns. They can manage a lot of things. What is your suggestion? What is your take on this? How can you suggest a woman to get someone on board who can understand technology, who can understand finance, and maybe she's taking care of marketing or vice versa?
Well, the first thing is I wouldn't segregate men and women. I would actually look, I'm a leader in the space. That's very important to me. So as a leader in the space, when I look to a business for whether I think it will require investment or not, what I'm really looking for is the fact that I look at two things. Well, actually, I probably look at three things. First of all, there's usually quite right. There is an innovative idea about a goods or a service, whatever it may be. I'm not impressed necessarily with AI, deep tech, blockchain. If somebody walks up to me and says, I've got a blockchain solution, I don't care. What I want to know is, what does that blockchain solution do that is different to anybody else, and how does it add value, and those sorts of things? Because quite honestly, any business these days, if you're not using blockchain, AI, deep tech, all of those, then you actually can't possibly be in the marketplace. So don't come to me and say, I've got a blockchain solution. So I'm looking for an innovative goods and service, but I'm also looking for the strength of the business itself. And for that, I'm looking for ESG metrics. They can't be separated because you do have to have a strong, sustainable focus, but you also have to have good social and good governance. Most startups don't have it. They tend to think, well, I'll just jump straight into having a good, product and an idea, and we all know that they don't have tech teams because they just don't have the funding and the money, and they're probably generally partnered with somebody else, which is all good, by the way. However, they do need to have good, strong structures. And I remember clearly a story once. I actually had a husband and wife who had the most incredible product. In fact, they won the defence contract for the US government. It was one of the projects that I mentored out of the Global Market Acceleration Program in Latrobe. So they actually got a multi-million-dollar contract. The first question I asked them, I said, is one, how are you going to scale the business? And secondly, what's going to happen when you and your husband don't like each other anymore? And she said, what do you mean? You do know we're married? And I said, of course I do. I said, the question was, what are you going to do for the business when you don't like each other anymore? Because I'm not investing into your marriage, I'm investing into a business. I'm not investing into friends, I'm investing into a business. Which means I'm looking for partnership agreements, I'm looking for governance that should actually set up. Now I do acknowledge that that is probably the most expensive part of startups. So that's our responsibility as an economy to make sure that the access to good governance and good social attributes and good environmental attributes are available to the startup world. Law and the legal infrastructure is far too hideously expensive for the startups to have, but it's critical. It's easy, it's a boilerplate solution, but we need to make sure we have it. So I think one of the things when I do incubate and when I lead businesses as startups, goods and service you produce is easy. There's some brilliant minds out there doing some absolutely extraordinary stuff that just takes your breath away. But they don't have a business, and a business is what I'm looking for. I don't expect them to have a C-suite of, a $500,000 C-suite, but what I do expect them to have is good governance, and that means when we deliver incubation programs, we need to start to think about that. We need to start to talk to them very early in the piece about how businesses are valued. We also, and I'm going to flip this around, we also need to re-educate the VC world on the way the pitches are done, and this is where I will talk about men and women. Women-led businesses generally have a great, well actually not generally, they always have a greater ROI, they are always more sustainable, and they've always got more longevity before they even attempt to get capital, but we pitch very differently. So I do think that there is an education required to change the venture capital market because, again, I'll say again, we only get 3% of capital and the very vast majority, well over 97% of the venture capital market is also led by men. So you walk into a room and you've got 10 men in suits who don't even get the conversation or the way that we might pitch. So I think there's an education due on both sides, on both accounts. But I think ultimately the core thing is still about the business itself. And I'm going to add a third thing to this. I know that we always say that we have venture capital and we try and get people to invest once they're generally they're broke, they're living in their mum and dad's house, they have no idea how they're going to pay their next bill, and that's got to stop. We've got to start to invest truly in innovation, which means out of every 10 deals you might invest in, one will succeed. But that's a good thing because we're actually investing in true innovation. We can't any longer just say, well, once the business has done the hard yards, then we'll come in on a white chariot and save them. We need to invest in innovation. So we have to have an appetite for risk. Now, I'm very lucky coming out of, at the moment, working out of Estonia, and I work with Enterprise Estonia. They have a very high appetite for risk there because they have a very high appetite for innovation and are the most digitised countries in the world. Punch well above their weight, given they've only got 1 million people there, and have smashed it out at COP28, from anything from space tech to all sorts of other tech. So incredible. So that's my sort of 20 cents worth.
Super. Fortunately or unfortunately, I see it in multiple different ways before you go universities. And am I audible? Yeah. And when I look at these kind of straightforward answers, I can't resist myself to ask the question today. I'm sure that you are more of like working with the scale-up fund. People who are at the growth stage, you are interested in. Two kind of situations that happens usually from the VC perspective. A, you really love the team. B, you really love the business. Which one will you choose and why? And what are the test cases? If you can give one or two test cases without naming them.
So Aditi, with my fund, I actually use a very different thesis to most VCs. So in a quintessential VC environment, a VC would put money, help the company go to the market, acquire customers, burn marketing dollars, and push up valuation. And a lot of, beyond the business, a lot of pressure is on the founders to keep raising new rounds of capital. At some round, the VC, the early stage VCs want to come out and make their margin. That's your typical VC, what happens. I don't do that. So what we do is we bootstrap and back IP, intellectual property. And once we do that, we use a metrics called demand-based investing, where, for example, I'll give you a real-life example. If you are a medium-sized company like Haldiram, which is into food processing in India, now you are looking at innovative food processing technology that could help you reach efficiency and effectiveness. Now, I would source a technology like that somewhere in the world by investing in it and then licensing out to Haldiram for 1 year as a test pilot, and if the solution works, generally it results in an acquisition. Similarly, I would do that on climate projects and renewable energy with energy companies that I have with ammonia, with hydrogen. I've done that with urban mobility companies and sustainable mobility companies, with charging infrastructure of EVs. We are looking at fusion technologies. Just to kind of give a caveat, the new climate tech fund that I just launched a few days back is backed by DIVA and RTA in Dubai, which is very hard to onboard government as your investor. I can give you that out of experience. So we've got a very different model, but let's say if I was to jump into the shoes of a regular VC, from my perspective, I find it a bigger merit backing the team than the business, because the business is a factor of the team.
Super. With that note, I'll hop into Professor. Naresh, if we look at startups worldwide, like I see seed stars, tech stars, idea, I would call them as a platform. Yeah? There are startups who are actually applying, they are settled good, great. When it comes to scale up their venture from one country to another country, in terms of technology or not. Am I audible without the mic? Yes. So when we look at that, when a company is actually trying to scale up from one country to another country, and then they're trying to find out a partner, and these guys are probably 2 years old business. How do you suggest them to go for a partnership? It's not that easy to find the right kind of partner probably from US to maybe Korea. Koreans are creating some amount of technology. US is creating the blueprint. But when they merge together, magic happens. Good things.
So I think I'd like to start from some basics around understanding how a normal business need to be perceived as different from a startup. A startup quintessentially will be risk-based. So risk-averse people should stay away from it. It needs to have the innovation quotient, and thereby the IP strategy is very important. It needs to be scalable, and it is a function of the founders and the team more than the product or the business. So that's one thing. When a startup checks almost all the boxes which I alluded to earlier, and then it is still surviving and still successful, that's when it can think of going global. And by that I mean using one of the other territories than the home domicile country to try and expand geographically. So by then what happens is it no longer remains a startup. It is at a scale-up stage. So from a startup's perspective, it's just logical to expand geographically. But what happens is it then becomes a function of the ecosystem that you're trying to use as a springboard. So what's in it for that ecosystem? Because ecosystems now are innovation hungry. They want the best talent and technology homegrown out of their countries. So a plain vanilla geographical expansion is sort of desirable from a startup's perspective. But if the ecosystem is otherwise wanting to be genuinely innovative and then wanting to make a difference in their own ecosystem, it becomes a challenge. Then comes the question of how, what modus operandi would be good in terms of having the right partnership. And that's where, in some cases, the right mentors can help, the right government and regulations can help, the right accelerator networks in those parts of the world can help. And if the startup has really scaled up in their home geography, then even a business alliance or an association with the large corporates or SMEs in advanced markets can also work. So there are different formats that are possible. But quintessentially, we need to understand how a startup per se is different from a business, which is different from a scale-up, which is different from how you wish to expand and use which geographical territory as your next springboard. So many moving pieces here, and there's no straightjacket answer because what can work in UAE may not work in US, and what can work there will not work in Africa. So it's a function of which geography you choose for your next logical geographical update.
I'll go to Farooq with this note. Farooq, a month back, I experienced one really interesting discussion with one of the SME based out of India. They wanted to get some leather from Tanzania. And they had a discussion with an institute in India to give Tanzanian manufacturers about the processing, about the structure. What professors say is completely true. I agree on that. But I have a question for you. When you look at these African markets, their ecosystem, if I'm not wrong, these guys are beautiful, amazing, open-minded. When someone approaches them to teach and then collaborate, and then take it forward, what is your key input to these people who really want to scale up their venture from land of beautiful people, Africa, to the world?
Well, we've always been articulating in earlier conversations, expansion is quite a nervous enterprise. It's a nervous decision. You're not too sure about, where you're heading to. So something very profound and very important that we said, knowledge of territory is key. So this is where we always emphasize on partnerships, because you need somebody who understands territory, understands the dynamics of ground operations, what even the policy framework, even in terms of leather, exportation, what are the bottlenecks when that very endeavor is going to. There are times where from paper point, things look very exciting. But immediately you get onto the ground, you start, activating whatever is on paper to reality. There's a lot of elements of surprise. So for a company that is seeking to expand, it's like I said, manage the expectations, be able to identify with people who understand territory wherever you're going, share information, exchange technology framework, what it's seeking to achieve, is it going to fit a particular paradigm? And once all this information is gathered, it's easy and it's able to, you're able to implement whatever it is. Like you said, Africa is the last mile. I mean, we're sitting on a massive amount of resources. Even our human capital is one thing that is non-negotiable. And we always have the burning desire to throw ourselves out there in the world, in the global space, play a major role in the global economy. Because the confidence of resources what we have. Now, where we lack the confidence is, are we going to, excel and fit in that space? That's why I said partnerships is what is going to help us. Partner with people who have blazed a trail, who understand, the business, who are doing it at a certain level, and then we should be able to be fine in that regard. So understand the market that you're going, identify who is doing it in that space, who has the territory understanding, who is able to help you move on a certain trajectory that is going to meet your business expectations. So we cannot do it all by ourselves. That's why I'm here. I'm becoming an ambassador for Africa. Make sure that I have these handshakes with the likes of Amit, with yourself, with Lisa here, so that I go back with all this resource and say, look, let's align this very activity with this one. Let's project it here. Let's move this way. Let's allow them to guide us so that we're able to maximize on the resources that we have. I'm very confident Africa will be fine. We're the last mile, local for us. The startup ecosystem is growing. Governments are becoming, very receptive towards the idea because startups have gone ahead of regulation in Africa. Governments will wake up, central banks will wake up and there's a technology that is disrupting the financial space and say, hey, hold up, come to the table, let's interrogate this, technology. It's going against the rules, but walk us through how you do this. This is the regulatory framework. How do we marry the two so that we create that, ecosystem that is, in line with regulation so that it doesn't become a hammer in the hand sort of regulation, but much more of a collaborative thing. So we need people like yourselves, those in the global space. That's why, like I said, I throw myself out in the world to represent Africa, to go back with all this knowledge and connections, understanding, track record. So we also carry our young startups along.
Yeah, please.
Yeah, I just want to speak on that because I think it's really passionate. Africa's very passionate to my heart as well, and I just want to relay a story actually. So yesterday I had lunch with David Shaw. Not everybody in this room may know who that is, but he is the godfather of blockchain. He invented blockchain and is also the inventor of digital money. He is about to release the world's new platform, so the better than that platform. He doesn't need money from anywhere. He can get it from Microsoft, Visa, anybody will bucket money. But as Saadi would know, he specifically wishes for that platform to be launched out of Africa and particularly led by women. Now, the reason for that is, and this comes to the startup conversation, we also need to understand that startups, I've just come from the same conversation, just come from COP28, where the voluntary carbon market and sustainability is being led by Africa and the global south and emerging nations, but particularly out of Africa. Project after project after project of renewable energy projects, billion-dollar projects, they are saying we want to partner because for the first time we don't want to repeat the history of the past. They want investment to flow into the country, not have an equity loss that takes money out of the country, and that will come through partnerships. And that's the very reason that David Shaw wants to actually partner with Africa and prove that it can be done, and it will be the next biggest thing you will ever know about. I can't release exactly what it is yet, but it will be coming out of Africa. So I think that's a very strong message to say, and that's a very different conversation for VCs to be having, is do not expect to go into Africa, colonialise and capitalise and take greater than 50% of these startups. What they want, the same as in COP28 and in the voluntary carbon market, is they want the world to respect their product, buy their good products and good services, export them to the rest of the world so they've got liquidity and money coming in, and that's de-risked their business and made the conversation a much stronger investment conversation than they've ever had before. That is a profound shift on what we've been having for the last 20, 30, 40 years that I've been in this entrepreneurial space. Sorry, I had to get that part in.
That's completely fine, but that actually encouraged me to ask a question for all of you. You say that VCs want to get about 50% of the stuff. I have seen in my life when I was in Nepal, I saw that a startup diluted 80% of its entire equity just to get very small amount of money. Now, my question to all of you before we go for a conclusion.
When you feel that you will be investing in a startup, what is exactly you are looking for? Getting more and more equity? Or getting probably a disruption in the market and then multiply the money? Of course, as a VC fund, you need to multiply the money, otherwise you can't sustain. Of course, as an investor, you are investing because it has to be multiplied. Otherwise, it doesn't make any sense. Otherwise, you'll put that money probably in stock market or maybe in bank. So I'll start with Dunstan and then eventually to Amit, Farooq, and Professor.
Yeah, any investor will be definitely looking at returns. Here, what I would like to say is like continuation to what Amit said earlier. Investing on as a VC, investing on a particular project and let them grow into the next level. As a family office, our perspective is in a different angle. When it's a VC, I would like to give an example of an aquarium. Okay, where we have water situation. He, as a VC, will be investing on a particular fish, feeding the fish food, make it grow. The feed, the family office, we provide the feed, the water, that is that is the whole concept. How we incorporate, because we have the capability of our own projects where we can accommodate these startups. Like as I initially when I mentioned that there are certain projects that we know of which one of the projects is the underwater theme park. Now there we are given an opportunity to start wherein we are using high compressed recycled plastics for construction of the theme park. So that is there we are not giving them any money, but we are giving them an opportunity to deploy their idea, and in the process they get the money. Another startup we are working currently now is on the hospitality sector, where today some of the hotels that we go, the most important factor that we are facing now is food waste, especially if you see in most hotels the buffet where it is served. If you take, it's not deliberate, they take food in the plates and then they make it. Today we're working on with the startup, how we can avoid it, especially as part of the stages. Things like hunger is one of the factors. This is something we need to kind of look at. So like that, we provide the meat. In the process, we support them and make them.
Go by the guts. Yeah. So the day we will have these kind of gut feelings, which is coming up as an investment, quote unquote, criteria, probably we can see a lot of disruption. Deep tech is not that easy to understand from the perspective of finance, until unless you mix it with technology, and that too in a very deep level. There are startups, to be very honest, who have got probably a different kind of disease. They can't speak, they can't express themselves. Amazing deep tech solution, guys. Amazing. Usually coders who have got burger in front of their desk, they speak a lot on coding, not as a public speaker. So that's the challenge. So maybe we can think over that and then take it forward. Thank you so much for the amazing panel and lovely discussion. Yes, of course, we have a Q&A. We can have a mic for the audience. Can we please?
Thank you so much for the amazing discussion. So there were so many
can you introduce yourself and then? Yeah.
So I'm one of the attendees of this conference. My name is Avi. So what I wanted to know also is VC industry in their prime started with a concept where they actually did risky investments. And risk mitigation is a part of growth of a VC. that you need to come up with strategies that this needs to be mitigated. But what that has led to is, that has led to VCs becoming more and more towards the safe investments and innovation being stifled. So what is your viewpoint? Because you cannot compare a deep tech startup and matrix with an e-commerce startup or with an app startup for that matter. So that would be really helpful. Thank you.
Yeah.
To answer that question, I think there are all sorts of VCs, like my colleague just mentioned. You cannot generalize VCs under one umbrella. Each VC has a different priority in how they look at their investment. So early stage VCs seem to be more risky, and hence you would find many early stage VCs sector agnostic. They want to kind of widen their footprint in the funds they want to take. As you keep going up the ladder and reach a growth stage VC or a late or mature stage VCs, your thesis gets more filtered. You understand the areas that you want to invest in and what are the areas you want to drive. So it really depends on the type of VCs, because the umbrella of VC is very, very exhaustive, I can tell you. There are many, so you must have heard this terminology that 20% of your portfolio will give you 80% of the return. Now the flaw lies in that statement, which basically says a large part of my companies are going to fail, and a few of them that succeed is going to cover up the losses. So that comes from your quintessential portfolio management approach that traders use in investment banking, where you would, in a simple term to understand, majority of your trades might not do well, minority would, but they would cover the losses of the majority. So that's how VC has been inspired. Also, we must understand that both venture capital and the next level up from there, private equity, is a very risky asset class, because you're taking risk on an entrepreneur, on an idea which may work or may not work. These are not publicly listed companies with information available to everybody to weigh and measure. So the answer really lies on the stage of the VC that you're dealing with and what is the risk profile they're dealing with.
You can have the question from there and Mike after that over here. Yes, please.
Hi, my name is Dr. Loretta Sanders, and I have a question as it pertains to VCs. I'm in this space of people, what I call the people space, and I've noticed that not many VCs will invest in people. You will invest in tech, you will invest in, you will find some that will invest in a clothing line, but it can't be specific to certain things. So, and then that goes into, I hate that she left, because one of the things that we know is that women get less than 3%, less than 0.03% of all investment. Because women tend to do heart projects. So I was just curious to know as to why was that so, that most VCs will not invest in, say, for example, one of the things that I do is I work with people who, after they've decided to, say, change their lives, for example. So I work with them doing coaching and counseling to help them sustain the change, right? There's no product involved. Do you understand what I mean? Yes. I don't have a little fancy app or any of those kinds of things, which is a challenge. So can you help me understand why those type of projects don't get much investment? That's the first question. And second, what would be your advice in equaling the playing field for women to get more money, as women typically tend to deal with heart projects more than hardware and software?
1 minute for each and every one of you, if you all can address that. It's a beautiful question.
Yeah, it's a fantastic question, and my straight take is we are not coming from a position of weakness. We are coming from a position of strength when it comes to women-led entrepreneurs, because women are known to multi-manage. Women are known for longevity, and they have higher internal strength, and they can manage the entire family. And men are just one part of, or one elemental part of that family. Having said that, I think my practical take on this is because I believe in the trading game in the VC space, and it's the whole chain. If the next stage would be receptive of what I'm getting into, I would go and then take a bite. So the buck has to start from there, and the buck can stop anywhere in the chain. So at the elemental level, this paradigm shift has to come. And I think I totally support the cause that women-led entrepreneurs cannot be funded below 2% of the global capital that ever goes to the space. Having said that, your other part of the question is, if you're not into tech, if you're not into something jazzy and flashy, but if it's just about having a people enterprise and put a VC invest into it or not. So let's understand what VC actually does. VC is making risky investments. There are VCs that are industry-specific specialists, so they will only understand enterprises from that industry. So I think it's just a function of is there an industry specialization? Is there a taker at the next level? And the elemental shift has to start from the bottom of the pyramid, I would say. And the sources for that kind of support can come from governments, that can come from social enterprises, that can come from women forums. And my friend Amit here himself is supporting a 700 plus women kind of sort of forum. So at the elemental level, this paradigm shift has to come, and then the chain effect will follow itself.
Yeah, I think this is a concern that we all worry about. There's a lot of, let's continue with the advocacy and let's continue with the mentorship. I'm sure you've taken something from what my brother has said. Yes, it might be people, but there can be some elements of a product, right? Which converts that management of engagement of all these people into a platform, which becomes a product. You understand what I'm saying? So yes, it might not be something hardware, but then like all these platforms, Facebook, it will categorize as a product, and then you use that to attract the sort of investment that you need. Yes, I'm really also concerned about, even at Arrest Capital, what we're seeking to do is actually activate a women's desk, because we see the bias. It's very obvious that women are not getting enough of the funding, and they constitute a very, very strong component of business growth and sustainability, and how to, businesses can outgrow its founders. The research is there. It's proven that women are good business managers. So yes, I really want to commend Amit for championing that women, supporting women enterprises, and I think that we will see that change. We will see that shift over the next couple of I'm privy to conversations. The boardroom conversations is gearing towards how we can activate more women funds, and even founders of funds are beginning to buy into the idea of funding women-focused VCs. So we will get there. Let's not give up, renege on the whole, but I'm very confident that the time will come where we see a lot of women attracting funding.
So the straight answer to what you asked is, the reason that why VCs don't fuel something which is very people-centric versus product or tech-centric is the difference between tangible and intangible. VCs are not the smartest people. Let me tell you that. I function between hundreds and thousands of VCs every day. So it's about what is tangible, what is not. So understanding where is limited. It's not your fault, it's the fault on the other side of the line. As far as women getting funded is concerned, let me give you some statistics. In the last 5 divestitures in the world, women have outperformed men by over 400%. The largest VC in this region, UAE, is a woman by the name of Noor Sweet, who runs Global Ventures. She's a good friend, and she runs one of the largest funds in this part of the world, over $550 million fund. And I'm telling you with my own experience, if there's a region that is making this change and bringing women on the forefront of both investment, corporate positions, board level positions, it's UAE. Thank you.
Brilliant. Last question, please, for the sake of time. Yeah, please, ma'am.
Yeah, thank you. I'm Patricia from DRC. I love what you say. VC are not a smart person. I agree with you. I agree with you. I will explain why. I agree with Arichi say I don't like the VC because, like you say, you just, oh, if we need to invest, we need to check this, we need to check this, and I try to prove knowledge also. I agree with you. Why? 6 months ago, one of the biggest platforms with women, African women doing business, they went almost bankruptcy. They was looking only 1 million to try to stabilize, pay salary. VC refused to give them funds. And then I hear about that. I decided to buy the company. I say, okay, I want to buy the company. And my lawyer from Paris told me, why do you want to buy a company? They're going down. I say, Christopher, I need to transform this platform to the bank, Women Bank. They say, yes, but they don't, you can see they're going down, and in Paris you're going to pay the tax. I say, no worry, I want just to buy the platform because they're based in Morocco, in Gabon, in Senegal. I'm looking to get the license for this company. And I bought the company, and now we are transferred to the first women bank in Africa. You know, this is why. And then what? VC, they just walk away. So now when private people, the VC, they come to me to say, we want to invest. I'm saying very expensive. Like you say, they're not smart. I was smart. I knew where I was going. I don't want to check when I listened, I saw or I see a woman doing business. It's not about the deck. I check to vision and how passionate she is. Because you can find a woman very, very passionate and very strong. They can give you back 10 times what you invest in their company. They are just looking someone, I'm calling it destiny helper. Someone gonna trust them, invest the company, and you can see how they will make more than what they want. So I think one of the mistakes private equity and VC you all made, and that is the reason why you are still on your top of the world, and then you will go down, because all those women, they're gonna wake up. They will decide to put the money together, and they will no longer let you come in. Or if we let you come in, we're gonna cost you a lot of money for you to join us. And I think that we need to change the conversation. We cannot just, say now we need to make sure if you are making money, if your company is good, because you have the people. They are going down because maybe this company was because of COVID. After COVID, they really went down. They was getting funds from Coca-Cola, from Dior, from many big funds. And then after COVID, they could not get the money. They was just looking 1 million to go. And I say, why don't we transfer? And now we have all this funds. So for me, I believe that if you want to help a woman to grow their business, if you want to help a woman to scale the business and to expand, you need don't just look on the deck. I know that you are following the money, but look at the passion that this person that has. When you talk to someone, you know I can trust her or I cannot trust the person. And I think when VC are going to change the mindset, believe me, we will create the next billion of a woman. And they are the one that will run the world in the next decade. I want just to take this feedback.
I would like to leave you with 2 words because it's very relevant to this. Firstly, when you talk about venture capitalists, the operative word is fund manager. Circle the manager word.
Yeah.
So what do you expect out of managers? Number 2, I think when Arijit talked about startups onboarding capital, there's a concept that we didn't speak in this forum about smart capital. That's what entrepreneurs should be. The capital should work for you, not the other way around. So I think it's a collaboration, like Naresh said, my colleague as well, it's a collaboration between the investor and the company where the capital actually works for you to make you achieve your objectives and managers. Thank you on that note.
To add to that, like I said earlier on the early panel, at times some startups don't need funding. But this craze of going out there to seek funding and look within, exhaust every avenue that could allow you, before you go out there to a VC or anything, because like it's been established here, yes, even at the horse price, there are times where, as a jury, we declare a startup as the best startup and then a startup that didn't even made it to the final stage turns out to do even better. You can imagine a collective of experts, we got it wrong. So it's never, it's your success doesn't depend on a venture capital, whether you're rejected or not. At times, it's in your hand. So let's take note of that.
Let's take this as, I think, the end of this panel. Really sorry, I guess we are on time for the next panel itself, and it's a beautiful discussion that we had, especially the comments that came from the audience. That's called the vibration. Thank you so much, ma'am, for your input. I would rather say that if you look at VC as a term, probably we shouldn't call it only as a venture capitalist, rather it's a venture capitalist. So there are people, it depends on which door we are knocking, how we are knocking, how we can build the trust. This is the only thing I think we should cherish and understand how we can trust each other. Everything else is easy. Thank you so much.